dear traders, you are watching weekly review of US stock market with me, Tahmina Salomova. The US stock indices ended last week with mixed results. Morning gains in the S&P 500 and Nasdaq Composite indices turned into losses at the end of Friday's trades. A sharp sell-off in biotech and healthcare stocks weighed in investor sentiments. All three main indexes recorded weekly losses when Friday's gain in the Dow Jones Industrial Average, driven by 8.9% jump in Nike shares, didn't help. The Nasdaq Composite closed on Friday down 1% at the level of 4,686.50 with a 2.9% weekly decline. Biotech companies weighed heavily on the index. The Dow Jones Industrial Average gained 0.7% to settle at the level of 16,314.67. During the Friday session, the blue chip index had been up as much as 250 points. Its weekly drop totaled to 0.4%. The S&P 500 fell by less than a point, closing at 1,931.34 and posting a 1.4% weekly loss. Healthcare companies led the laggards. The main indexes showed negative dynamic in 6 of 7 sessions since the Federal Reserve left its key interest rate flat on September 17 due to worries over slowing global economic growth. Early Friday's sharp gains were attributed to optimism caused by Janet Yellen's hawkish comments made late Thursday when she said the US economy is strengthening and an interest rate hike is likely to be seen this year. Revised data on US economic growth showed that the GDP grew faster than first estimated, driven by higher consumer spending and stronger business investment. The US economy expanded by 3.9% in the second quarter instead of 3.7% announced earlier. Shares in Nike soared by 8.9% after the athletics gear maker late Thursday reported an increase in sales that was driven by a jump in revenue in China, which has been a matter of concern recently. Nike said its fiscal first quarter earnings rose to $1.18 billion or $1.34 a share from $962 million or $1.9 a share a year earlier. Revenue grew 5% to $8.41 billion. At the same time, Caterpillar share fell by 1.3%. The machinery giant announced Thursday that it is cutting 10,000 jobs, and it expects weakening demand from resource and construction companies. Moreover, Caterpillar cut its 2015 revenue forecast by $1 billion to be about $48 billion. It would mark a decline of about 27% from a peak of nearly $66 billion in 2012. You have watched weekly review of US stock market. See you!